Chris, we have talked many times about Tesla's role in the macro market, how it's so big, there's so many shares, so much options activity, that it matters even if you don't own Tesla stock or could care less about the company. What are you seeing with Tesla right now that is so interesting?
Good morning, Brian. There's so many things that are so interesting going on in Tesla right now. It was up over 22% last week. We had humongous options volumes that traded. And that was all reported, made for some great headlines, how many options are trading compared to the broader market, things like that. I do think one thing that was somewhat overlooked last week was comparing that options volume on a daily basis to how much open interest changed the next day. So basically what that's telling you is, let's look at, for example, on last Monday, almost 2.5 million calls traded, which is a huge number, largest since the stock split last year. But the next day, open interest only changes by 120,000. So that's about 5%. So basically what that's telling you is, despite all that options call volume that's trading, the next day, only about 5% of that volume carries over to new positions. So, around 95% of that options trading on a daily basis is both opened and closed, whether it's bought and then sold or sold and then bought. These are very, very short-term trades. So, that's going to not have quite as much of an impact as, consistent buying that builds up every single day.
So it sounds like and listen, the Teslarians out there, they'll tell you that in 20 years, it'll be the only car company or whatever they're going to say. Sounds like there's also a lot of short timers hanging around.
Yes. So, momentum-based trading has been a very effective strategy for the live, basically since the COVID low. So, there's nothing wrong with momentum-based trading, but Tesla is the poster child for that. When you have a stock that's up 22% over the course of a week, and you're looking for a place to find a momentum-based trading, that's where it is. You're going to look at, for example, last Thursday, those weekly 1,100 calls. That's right around where the stock was trading. 152,000 contracts traded, net 300 were closing, so no new position. So basically all the trading in that line, the most active line that day, was both opened and closed, possibly many times over the course of the day. So that's not necessarily driving the stock as much as people think when you're both buying and selling or selling and buying in the same day, sometimes in the same hour.
All right, great stuff on Tesla's pivot now and talk healthcare, more specifically biotech. Saw in one of your notes, you're starting to see some bullish activity there. Where specifically, and what is that telling you?
Yeah, so we're looking a lot of times at the ETFs. XBI is the ETF, and over the course of the last 2 weeks or so, we just kept seeing some consistent bullish flow in the options, whether it was selling puts to buy a call spread or buying calls or whatever the case may be. Now, if you were to look at the XBI compared to most other sectors in the broader market, it's a major underperformer. So we're seeing a lot of investors via the options trying to set up attractive risk reward strategies for the biotech sector broadly to catch up. Now, obviously, trading specific biotech stocks that are very catalyst driven can be really difficult to pick the right ones. But if you're able to look at a ETF like the XBI and say, okay, this sector has majorly underperformed. And one of the potential catalysts may have been going into Biden's, what he was mentioning last week in his speeches and his program. And the fact that there was not a lot of negative news on the healthcare sector, it was kind of, glanced over a little bit. Maybe that finally allows that space to catch up a little bit. So that's been a clear thing we've been noticing over the last 2 weeks.